High-yield savings accounts and crypto platforms, April 2026. If you're still keeping your money in a regular savings account in 2026, there's a high chance you're quietly losing money every single day. That might sound dramatic, but when your bank is offering something like 0.3% interest while inflation continues to rise, your purchasing power is slowly shrinking. At the same time, there are financial institutions offering up to 5.00% APY on savings, which is more than 12 times higher than the national average. The difference between these two is not small. It's massive, and over time it can mean thousands of dollars gained or lost. In today's video, we're going to break down everything you need to know about high-yield savings accounts in April 2026. We'll look at the best available rates, how these accounts actually work, what conditions you need to watch out for, and how much you can realistically earn. And toward the end, we'll also explore the top crypto platforms of 2026 if you're someone willing to take on more risk for potentially higher returns. By the time you finish watching, you'll have a much clearer idea of where your money should be sitting and why. Let's start with the basics. A high-yield savings account, as the name suggests, is simply a savings account that pays significantly more interest than a traditional one. Most of these accounts are offered by online banks or digital financial institutions. Because they don't have the same overhead costs as traditional brick-and-mortar banks, they're able to pass those savings on to customers in the form of higher interest rates. The result is a win for savers who want their money to grow without exposing it to risk. The key advantage of these accounts is that they combine safety with growth. Your money remains liquid, meaning you can withdraw it when you need it, but at the same time it earns a competitive return. This makes them ideal for emergency funds, short-term savings goals, or even just parking extra cash that you don't want sitting idle. Unlike stocks or crypto, there's no market volatility to worry about here. Your balance grows steadily, month after month, through compound interest. Now, as of April 2026, the highest available savings account rate sits at 5.0% APY, and it's being offered by institutions like Varo Bank and APY. These are currently at the top of the market, but there's a catch that many people overlook. These top rates often come with conditions. For example, in the case of Varo Bank, you typically need to meet certain requirements, such as receiving qualifying direct deposits, maintaining a linked checking account, and keeping your balance within a specific limit, usually up to $5,000, to earn the full rate. Anything above that might earn a significantly lower percentage. APY offers a similar top-tier rate of 5.00%, but it operates as a credit union, which means you need to meet membership requirements. In their case, this involves agreeing to a statement of faith, which may or may not be suitable for everyone. Additionally, the highest rate only applies to a portion of your balance, and the interest drops for higher amounts. This highlights an important point. The headline rate is not always the full story. Just below the top tier, there are several strong options offering rates between 4.25% and 4.60%. PayBank, for example, offers around 4.60% APY with no minimum balance requirement, but it's a mobile-only platform with limited functionality. You won't get features like direct deposits or traditional transfers, which could be a deal-breaker for some users. Then there's Fitness Bank, which offers approximately 4.50%, but ties your interest rate to your physical activity. To earn the top rate, you may need to average around 10,000 steps per day. It's an interesting concept, but not necessarily practical for everyone. Other institutions like Signify, Abound Credit Union, and OnPath Credit Union also offer rates around 4.25%, each with their own unique conditions. Some require membership, others limit withdrawals, and some only apply the highest rate to a capped balance. Moving further down the list, you'll find banks like Axos, Newtek, CET Bank, and Vio Bank offering rates between 4.0% and 4.2%. While these may be slightly lower, they often come with fewer restrictions, making them more flexible and easier to manage. To understand the real impact of these rates, let's look at a simple example. If you deposit $10 ZooZone into a high-yield savings account, earning 5.0% APY, you could earn around $500 in interest over 1 year. Compare that to a traditional savings account offering 0.39%, where the same amount would earn just $39. That's a difference of over $460 for doing absolutely nothing different except choosing a better account. Scale that up to $50,000 or $100,000, and the gap becomes even more significant. Of course, it's important to remember that these rates are not fixed forever. Savings account interest rates are closely tied to the Federal Reserve's monetary policy. As of March 2026, the Federal Reserve has kept its benchmark rate steady after a series of cuts in previous months. If rates are reduced further later this year, savings account yields are likely to decline as well. That means the high rates we're seeing right now may not last indefinitely, which is why many experts suggest taking advantage of them while they're still available. When choosing a high-yield savings account, it's not enough to just look at the APY. You also need to consider factors like minimum balance requirements, monthly fees, withdrawal limits, and how easy it is to move your money in and out. Some accounts require you to maintain a certain balance to earn the advertised rate, while others may charge fees if you exceed a specific number of withdrawals per month. Understanding these details can make the difference between maximizing your earnings and falling short of expectations. Another important consideration is accessibility. Most high-yield accounts are managed online, which means you'll be relying on mobile apps or web platforms to handle your transactions. For many people, this is actually a benefit, as it allows for quick and convenient access. However, it also means you won't have the option of visiting a physical branch if you prefer in-person service. Now, let's shift gears and talk about alternatives. While high-yield savings accounts are excellent for safety and liquidity, they're not the only option available. Money market accounts, for example, operate similarly but may offer check writing capabilities. Certificates of deposit, or CDs, often provide higher fixed rates in exchange for locking your money away for a set period. And then, of course, there's the world of investing, which includes stocks, ETFs, and cryptocurrencies. Speaking of cryptocurrencies, this is where things get a bit more exciting and a lot more risky. Unlike savings accounts, crypto investments are highly volatile and can fluctuate dramatically in value. However, they also offer the potential for significantly higher returns, which is why many investors are drawn to them. As of April 2026, several crypto platforms stand out for their features and usability. Kraken is widely recognized for its low fees and advanced trading tools, making it a popular choice among experienced users. Gemini is known for its strong security measures and is often preferred by those who prioritize safety. Coinbase remains one of the best platforms for beginners due to its simple interface and ease of use. For mobile users, Crypto.com offers a highly optimized app experience along with a focus on Bitcoin trading. Meanwhile, Bitmart is a go-to platform for those looking to explore a wide range of altcoins that may not be available elsewhere. Each of these platforms has its own strengths and weaknesses, and the right choice depends on your individual goals and level of experience. It's crucial to approach crypto with caution. The market is unpredictable, and prices can rise or fall rapidly. Unlike savings accounts, there are no guarantees here. You could make substantial profits, but you could also face significant losses. This is why financial experts often recommend only investing money that you can afford to lose and maintaining a diversified strategy. In the end, the decision comes down to your risk tolerance and financial goals. If your priority is safety and steady growth, high-yield savings accounts are one of the best tools available. They provide a reliable way to earn interest without exposing your money to market risks. On the other hand, if you're willing to take on more uncertainty for the chance of higher returns, crypto platforms offer opportunities that traditional banking simply cannot match. A balanced approach often works best. By keeping a portion of your funds in a high-yield savings account and allocating a smaller amount to higher-risk investments like crypto, you can create a strategy that combines stability with growth potential. This way, you're not putting all your eggs in one basket, and you're better positioned to adapt to changing financial conditions. As we move further into 2026, one thing is clear: letting your money sit idle is no longer an option. Whether you choose a high-yield savings account, explore crypto investments, or use a combination of both, the key is to be intentional with your financial decisions. The difference between earning 0.3% and 0% may not seem like much at first glance, but over time, it can completely change your financial trajectory. So take a moment to evaluate where your money is currently sitting. If it's not working for you, it's time to make a change. Because in today's world, smart money management isn't just an advantage, it's a necessity.